If you're not trading red folder news events, you are leaving a lot of money on the table. But don't worry, today we're going to go and break this down in detail so you can start capitalizing on these movements as well. So we took 3 positions, a small losing position followed by 4.2 R and a full or just under a 1 R, which was a scaling. We're going to break this down. Why was I bearish and how can you be bearish the next time you see these events? So starting off, the pair that we do trade is NQ, and the time frame is always the 1 minute time frame. This is what I use for all my executions. Now the direction is normally based off the 4 hour. Today it was actually off the 1 minute due to the data highs and data lows. But regardless, we'll start today's session from breaking down the 4 hour time frame. So going back to the macro window, today we're trading the pre-market open macro, which is from 8:45 till 9:15, and this is only valid once we have 8:30 news and it's red folder. If it's not red folder, you do not trade this macro because it's not volatile enough. Okay, we want high probability trading conditions. So starting from the top, the 4 hour, I actually came into the market today with a bullish bias for this news because we have actually tapped, I think this is closed a little bit lower, but for one, we had swept the previous 4 hour candles low, which how you know on this channel, this is stage 1 for being bearish or bullish. If we sweep the low, we're going to look to buy. If we sweep this high, we're going to look to sell. Now, stage 2 is to mark out the closest bearish and bullish PD arrays, which are fair value gaps and inversions. Here is the closest bearish PD array, and here's the closest bullish. Now, so that wasn't really a big concern. We've only swept the low, which is stage 1. Stage 2 is to go down to the 1 minute time frame. Let's go back to where we were. And what we're going to do for stage 2, pre-market open macro, is simply mark out the data candles high and low. So at the 8:30 candle, this is the data release. You mark out the data low, you mark out the data high. If we sweep the high, we'll look to sell. If we sweep the low, we'll look to buy. Now, the only reason I was looking to sell, even though we've swept the previous 4 hours low, is because we had swept the data high and we still have data low that needs to be swept. An important statistic for you guys is on the same day, we normally sweep the data highs and lows. Okay, roughly a 90% chance both of them will be hit on the same day. So that's why I was bearish. Now we understand we're bearish. How can we actually enter into these moves? Now I use a multitude of entries, entry styles. It can be a breaker block, which looks something like this. Let's use a path. Let's say the market was making higher highs and higher lows. A breaker would be when we break through a previous bullish order block, and we can now use this as a bearish resistance. To put it in a simple term, so we could take the market or an entry once we pull back into that old bullish order block, taking the market back down. That's one of them. The next one, which is my favorite, is a volume imbalance. Now, simply all this is a close of the previous candle and an open. For a bearish example anyway, this candle at 8:43 closed bearish. And you see at the close, the market on the next candle has opened lower. So we closed higher and opened lower. This signifies bearish momentum, and this is actually where I took the first losing position. So after I took this first loss, I then waited for the market to show me another entry. It can be a fair value gap as well, if you look at the list, or a balanced price range. Now, balanced price range is when we have an inversion, like we see here. This is a BPR, because we have a bullish fair value gap with 1, 2, 3 candles, and a bearish fair value gap being disrespected. We use the 50 to enter into these moves. So we haven't got that. But we have now left a bearish fair value gap. So I'm interested in waiting for price to come back to this level. So let's press play. Let's see what happens. We come down a little bit lower into this bullish gap before eventually returning back to that bearish fair value gap. Now, I didn't enter straight away because we didn't have a strong displacement. If you remember how we enter breakers, I also want a displacement for a fair value gap. Okay, so we didn't have that. these are not short-term lows, in my opinion. These are minor levels that are being broken. So what do we need? We need the holy grail volume imbalance. We need the next candle now to open up lower. Let's play. What do we see? So see how this bearish candle closed? We then opened up lower. This signifies bearish momentum. I took an instant execution, which opened up a little bit higher, so I got a better entry. Stop loss was at 10 points, target at the data low. Remember, these are the strongest draw on liquidity. So for the re-entry, at this point, I'm risk-free on this. So I'm interested in stacking a position since price is pulling back to this now another bearish fair value gap. So I was ready to stack instantly on the next volume imbalance. Now I'm even more bearish because we swept a protected high. This is an A+ fair value gap now. If this was to open up lower, which we did for a split second, I took an instant execution, stop loss at 20 points, just to be around my break even, and targeting just under a 1R. Okay, so that's how it played out. Perfect executions today. If you guys have any questions, let me know down below. Any video suggestions, we're going to keep posting content throughout the rest of this year. So thank you guys for watching. I'll be back again.